viewers, in this video we'll be going over silver and gold futures. In this video we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for gold and silver. So back to the technical analysis, we'll be going over silver first. Today we are up 70 basis points on the 1 hour chart. We were approaching to positive MACD. However, we see a slight divergence on the 1 hour chart. If we expand out to the 4 hour chart, we are approaching to negative MACD. And if we expand out a little further out to the daily chart, we see a nice reversal in play and may even turn positive on the daily MACD. So if we do manage to reverse and head down lower, the next support that I see is around a price of $14.90. That coincides with the 18-day moving average, which is this purple line, and also coincides with previous resistance. And since we're above resistance, that now acts as our support. And as for resistance, if we do manage to reverse and head up higher, the next resistance that I see is around a price of $16.50. That coincides with previous support, and since we're below support, they now act as our resistance. So we made a support back in March 2nd, and that will act as our resistance in the meantime. And to hit that resistance, that price movement is roughly around 5.6% to the upside, and to the downside, support level is around 4.4% to the downside. So let's head back to the day-by-day probability model. As the days progress to the 7th day, we have a 27% chance for silver to head up higher between 0 and 5.7%, a 20% chance for silver to climb higher between 5.7 to 11%. On the other hand, we have a 40% chance for silver to fall between 0 and negative 5.7%, and a 13% chance for silver to fall between negative 5.7 to negative 11%. So let's examine the day-by-day forecast for silver. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right now we have this current trend on the line graph, and the trend that is the best match to it is November or August 2nd, 2011 to October 26th. So let's point out why these two charts are similar. So we have the current trend right here, and below is the trend that I believe is the best match back in 2011. So what we have here in the beginning of the trend, we start off at the bottom Bollinger Band, touch the upper Bollinger Band, once more touch the bottom Bollinger Band and made a nice reversal to touch the upper Bollinger Band. We start to see a similar pattern here as well. We start off at the bottom Bollinger Band, upper Bollinger Band, again, bottom Bollinger Band, and then we saw that reversal. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend as well. So there's a reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 2nd, 2011 to October 26, 2011. Back then, silver was up around 1.9%. Slightly close to 2% to the upside in the next coming days. So if we head back to the day-by-day probability model, that coincides with this standard deviation of 27% between 0 and 5.7% in the next coming days. So if we examine more closer at the technical performance of each trend, we're in the trend of, let's say, this is our current trend. We're down 21% from monthly high, up 22% from monthly low, up 1.7% from 10 simple moving average, up 7% from 20 simple moving average, and down 3% from 50 simple moving average. Compare that to the trend that we just examined, August 2nd to October 26, 2011. It was down 31% from monthly high, up 11% from monthly low, up 4.5% from 10 simple moving average, up 6% from 20 simple moving average, and down 8% from 50 simple moving average. The technical performance is somewhat similar to the trend that we just examined. So let's now review gold futures. So at this moment, we are currently down 50 basis points on the 1 hour chart. We are slowly approaching to oversold RSI. We start to see a divergence and turn negative on the 1 hour MACD. If we expand out to the 4 hour chart, we may find temporary support on the 50 moving average on the 4 hour chart. And on the daily chart, we start to see we hit resistance back around the price of $1,788. So that will be our first immediate resistance. And the next support that I see is the 18-day moving average. That coincides with previous resistance back in March 9th at around the price of $1,680. So if we do manage to fall lower, that price movement is roughly around, I would say, 2.8 or 2.9% back to support. And for the resistance, if we continue to reverse and head up higher, that price movement is roughly around 3.3% to the upside. So let's examine the day-by-day probability model for gold futures. As the days progress to the 7th day, we have a 27% chance for gold miners to climb between 0 and 2.8%. On the extreme case, we have 18% chance for between 2.8% to 5%, and the extreme case here, 9%, between 5.6 to 9%. And on the other hand, we have a 45% chance for gold miners to fall between 0 and negative 2.8%. So let's review day-by-day forecasts for gold futures. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right now, we have the current trend, and overlapping it is the trend that I believe is the best match. And this trend dates back to January 21st, 2010 to April 19, 2010. So let me point out why these two charts are similar. So we have the current trend right here, and below is the trend that I believe is the best match. This trend starts off with the bottom Bollinger Band. Twice we touch the upper Bollinger Band, and then we touch the bottom Bollinger Band once more, and then made a nice reversal to touch the upper Bollinger Band. So in the trend in question, we start off at the bottom Bollinger Band, twice touching the upper Bollinger Band, then touching the bottom Bollinger Band, and making that nice reversal to touch the upper Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. We also have 5 points on the current trend, so there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was January 21st, 2010 to April 19, 2010. Gold mine or gold's futures was up around 2.7%. So if we head back to the day-by-day probability model, we see that gold futures has a 27% chance of climbing higher between 2.8%, 0 to 2.8%. So let's examine closer at the technical performance of each model. So the trend that we're currently in, we're down 41 basis points from monthly high, up 15% from monthly low, up 2.6% from 10 simple moving average, up 5.8% from 20 simple moving average, and up 7% from 50 simple moving average. And the trend that we just examined was January 21st, 2010 to April 19, 2010. It was down 2.2% from monthly high, up 6% from monthly low, down 1% from 10 simple moving average, and up 60 basis points from 20 simple moving average, and up 1.6% from 50 simple moving average. The slight difference that we see here is the 10 simple moving average is down 1%. Compare that to up 2.6% on 10 simple moving average. That is a slight difference that we see in the technical performance of each model. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.